I think the first thing we need to recognise is this recovery is really quite a good one. It's been going on for over a year now. It's strong, but there are some real concerns over sustainability. I think there are three big concerns. The first is the housing market. The housing market, particularly in London and the South East, is growing very strongly. And one of the things we know is that house prices and the debt associated with rising house prices through mortgages, increased mortgages, that cannot grow forever faster than incomes. And at the moment, house prices are growing a lot faster than incomes. So that has to stop at some point. The second real concern, I think, is the trade side. So Britain has had a persistent trade deficit and a current account deficit, and that is now at levels we normally only see in booms, not just as you're exiting from, as you said, one of the worst recessions we've had, certainly in living memory. And so again, that has to get better if we are to sustain this recovery for a long time. And the third, maybe most difficult and damaging part of the British economic scene right now is productivity. This is the amount of output per worker or per hour worked. Now, for years, this has grown basically 2% a year through ups and downs of the economy, but it stopped in 2007, and productivity has actually been flat or even declining since then. And ultimately, productivity determines living standards. So if we don't see productivity growing, then we can recover, sure, but the recovery will peter out much earlier than we might like. Well, I think some of it will hopefully come back on its own accord with the recovery. So there are sectors, essentially sales sectors, where the more you sell, you don't actually need more people to do it. It just work becomes easier, and so you get more output per person. Some of that will come back, but some of it is rather more ingrained. So we've seen a really big decline in productivity in the finance and banking sector, also in the oil sector, because North Sea oil is now much harder to get out of the ground than it used to be, and also in some of the utilities. So there does seem to be some effect of increased regulation, meaning there's more staff to provide us with gas, electricity, and water, and so forth. And these things are rather more difficult to say they'll just come back, because actually one of the things we've learned is that the banking system, in particular, was running far too hot before the crisis, and so it's quite likely we're not going to see the big recovery in productivity that we might like. We might have to just get used to a more European-style economy where growth isn't 3% a year, it's more like 1.5 or 2, and that just makes things all massively more difficult across the board. One of the difficulties we are seeing in the public finances is although the economy is recovering, the public finances, the deficit isn't falling as fast as we would expect. In fact, it's really been plateauing now for 2 or 3 years. A lot of that is because growth has been so weak. But even when you strip out the fact that growth has been so weak, tax revenues are not coming in as we would expect. And so the share of taxation or tax revenues in the economy is lower than forecast year on year on year. And this is creating a bit of a black hole. Now, that might go away. We had a bit of this in the 1990s, but not as big as the problem today. So some of it is likely to go away if the recovery is sustained. But I think some of it's more persistent. And that means, ultimately, that unless we can deal with tax evasion, tax avoidance, some of the international tax competition that's depressing tax revenues, that means we just have to have more austerity or higher tax rates in the years ahead. And that's just not very good news, but it's just the way it is. I think it's very unlikely to anyone should expect any feast in the public sector, certainly for the next decade. I think for 2 reasons. One of them is that because we've had weak productivity, meaning that growth is not likely to be as strong as it was in the 1990s or 1980s, and also because tax revenues have been weak, we're now having to have more years of austerity than we thought we would have to in 2010. So instead of 5 years of austerity, it's now 8, just to get the public finances back into some sort of order. But the problem is, once we get to the end of this decade, once we get to 2020, ageing of the population starts kicking in really rather rapidly. This decade's quite easy for ageing, and so we're suddenly going to be faced with big bills for pension and healthcare, as a society gets older. So the next decade doesn't look very favourable either. On the face of it, all three parties say they're going to eliminate the deficit. But when you get down to it, actually they have different definitions of what they mean by the deficit. And so there is some nuance. Labour is definitely looser than the Conservatives, and the Liberal Democrats are sort of somewhere in between. So where Labour only want to eliminate the deficit excluding public investment, the Conservatives want to run a total surplus on the public finances. And so that gives quite some leeway of, in the order of 20 or 30 billion pounds. So that's what we're really playing for in the election, where the Conservatives would bring down the public sector net debt much faster than Labour. Labour wouldn't be squeezing so hard, particularly with public spending, over the next 5 years as the Conservatives.